following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 5th. Terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a magical Monday. Let's make sure we do everything we can to have an extraordinary Tuesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we can make that one little 2x4 shift out there, it means that we can find the gift in every set of circumstance that life is going to throw at us. That's really the role of life out there. That's the role of the markets we trade. We look at what the universe is throwing at us, either from the bullish side, well, not either, both from the bullish side and the bearish side out there, and then we go ahead and we take our positions out there. Now, I do hope you had a magical Monday, and I want you to know that I'm grateful for your presence here today. Now, I'm actually honored by your presence. I'm here to serve you. So feel free to pick up that phone, dial on in, call on at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures trading down 64 points, trading at 17,930. S&P futures off 7.5 at 2102. NASDAQ futures down 0.5%, down about 24 points. Russell off about 5 points. U.S. dollar index down 20 cents, trading out at 95.43. Goldilocks up $10 right now. Looks like we have our full moon initiation breakout going on. It's trading at 11.96. Silver up 17 cents at 16.62. Light sweet crude up $1.53, up 2.5%. Trading out at 60.44. Quick peek across the globe. Let's go see what we've got going on over in Europa right now. If we take a look at the DAX, assuming I can find it, up 136 points, and the FTSE is up 12. Let's take a quick peek at the DAX, see what it is doing out here. So still just kind of hovering around this little breakout-ish area back on March the 11th. Is the FTSE, I'm sorry, the DAX could be actually forming a secondary A to B equals CD down pattern out here. If we take a look at, we see the first one. So let's take a look at the DAX. It's possible. If we take a look, let me get rid of the trend line, just make sure that the breakout area, our B point, there we go. And we can see the first A to B equals CD to the downside. Now let's go measure the retracement, in essence, of the C to D leg. See what kind of retracement we have out here. So here's our second pattern. It's made about a 0.618 retracement out there. Maybe Maria in New York is happy about that. She's the one that is, she's one of the people, at least, that's trading the DAX out here. Let's go ahead and put in the new potential. That's if the low from April 30th, that was Thursday, if that low gets taken out. So you'd have a secondary A to B equals CD if, in fact, that low gets taken out. It would look something like this with that price projection right around the 11,003.56 level. Now, H.M. Gartley, absolutely, if you take a look at his, but if you interpret page 222 out there, the interpretation is when you've moved a large move, when you've missed, how about that? When you miss a large move, which we've had in the DAX, if you take a look at that move off the January 2015 low, January 6th to be specific, low was 93.82 and some change out there. From that low to the high that came in out here on April 13th, big move. Now, no A to B equals CD down patterns since that low up until the completion of the one that we just looked at, the one that took place here on April 30th. Now, yesterday's candle session was not enough. Just was not enough. It really needed to pierce halfway through the body, which would have been more closely around the 11,675-ish area in order for this to truly turn into a potential reversal pattern, a morning star pattern. Doesn't matter even if yesterday's action did. You're not getting any follow-through as we speak right now. Now, a lot of time left in the trading session, and, so let's just call it, it's a coin toss here with regard to whether or not that really qualifies as a morning star. This 3-candle formation out here, I'm saying it really doesn't. I'm saying it's more of a continuation pattern, quite frankly, to the downside. If the low, really all it would really take would be a close below the low of April 29th's candle. Most candlestick patterns, those that you want to be paying attention to, are reversals. The rest are the ones that move to the downside. I'm sorry, boy, I'm multitasking. So let me just we'll just go ahead and reverse that, right? The ones that you want to pay attention to, most of those are the reversal candles, but there are 2 continuation patterns out here, and we haven't seen that. But if you did get a close below 11,410.54, which is not even the B point, that would be your continuation pattern on the way down. That would be your signal that a second A to B equals CD, or a larger A to B equals CD, is to the downside. So in H.M. Gartley's book, he would tell you to buy that first A to B equals CD pattern. In Stevie's book, not published yet, nor has it been written, that's been written through workshops that I've done and so forth, I would tell you don't do that until you actually see a bullish reversal signal. And we haven't really got that inside of the DAX. So the message here is neutral to bearish, certainly not bullish at the moment inside of the DAX. FTSE, a little bit of a different story out here. FTSE still being able to trade above that 69.50-60 level. That's the December 1999 highs out there. So that is suggestive of a breakout pattern. That's what's going on in the FTSE. Little quick peek over in Asia last night. In fact, let's look at the Hang Seng first, down 368 points, 1 3/10%. That was not down as much as the Shanghai out here. But let's take a look at this. You know, there's still not a ton of damage that has been done inside of the Hang Seng. If anything, it's more of a bullish pattern at the moment, because it's simply moving sideways to work off of an overbought condition out here. So this pattern still looks pretty bullish to me. If we look at the Shanghai down about 4% last night, off 190 points. This pattern here, as we take a look at it, this is starting maybe to get a bit more serious. Maybe we'd see, this is a daily chart, maybe you'd see A to B equals CD down pattern here that would form over time. That would give you that Gartley buy pattern off of its significant bottom back here in February. It's pretty much been a straight line move up since February 9, 2015. Price is really below longer term 0.618 retracement as we speak right now. If we take a look at the retracement, though, off of the low from February 9 to the high out here on April 28th, you can see really not much of a retracement at all thus far. The 0.382 retracement takes you down to 41.81. Closed last night at 45.03. Nikkei, not a whole lot of action out here. We haven't seen a whole lot of action inside the Nikkei was the Nikkei closed? May 1st? Yeah, Nikkei must be closed. Maybe it's Valentine's Day over in Japan. Is that what it is? But the Nikkei was closed, so we don't have to really pay attention to that. It was closed yesterday. So I was just taking a look at Friday's action. Maybe somebody in the den can tell me what holiday they're celebrating over in Japan out there. Okay, so that's what's going on there. Let's go take a look at our daily contracts out here. Let's upper left-hand corner, you're looking at the Russell 2000. Upper right-hand corner, Dow futures. Lower left, you're looking at the ES Mini. Bottom right, you're looking at the Nasdaq. Let's start from the bottom patterns out here. Let's start bottom right and go left. If we start from the bottom right, we're taking a look at the Nasdaq. What we know right now is that the Nasdaq is trading below at this point, a 915. Oh, son of a gun! Oh, here we go. Okay. Thought I deleted that, which would have meant I would have had to go on and done more work out there. And I don't really want to have to do work I've already done. I got enough work on my plate as it is. So if we take a look at the NASDAQ here, we can see on the daily chart, NASDAQ had been traveling in this consolidation, 200 points out there. It broke above the consolidation level, came back and tested it, but it didn't reject it. Price came back into the consolidation area. That says that the breakout inside of the NASDAQ, the message right now is that it was a false break to the upside. It needs to stay above 44.73-ish out here. Yesterday's close, high wave candle formation. High wave candles, their meaning are just simply that price has lost its way. Well, no kidding, it's lost its way out here. Market's been, in essence, been consolidating for quite a period of time. So now we can also see that price is trading below its market profile resistance level, which is 44.62. We're at 44.55. If price continues down below this, we ought to see a price move down to the last swing point, or maybe to the bottom of the box out here in the 43.70. That would say that price would move. Let me go put the my data window back up on the screen. The area, as long as price stays below 44.73 right now, the target becomes in this, consolidation oriented pattern out here. A price moved down between 43.86 and 43.70 out there. So that's what's going on inside of the NQ daily futures contract. A quick peek here at the ES Mini. ES Mini, same kind of deal. 75 point ish, 80 point consolidation pattern from 2034 to 2109. 2109 is a key level of resistance. Price has found yesterday's move higher. We talked about it, that we really need to see that 2109 level cleared. And what did we see with regard to a close yesterday? I'm glad you asked me that question. I'm going to tell you that answer as soon as I can pop up the my data window. The actual close yesterday was 2109 and a quarter. Hey, making it by a tick is not exactly closing above a level of resistance. So what does that say inside the S&P futures? It says, hey, if it can't bust them up, it'll try to bust them down. But bust them down to where? You got to just look at the last swing point out here, April 30th low, and that would be 2070 out here. 2068.75 is your resistance level of your TAS market profile box out there. And so that says that would be game as long as price cannot clear 2109. If we take a look at the Dow futures, what do we know about the Dow futures? Well, we've got that certainly decided descending price channel out here. Price continues to find resistance. I mean, take a look at these closes and take a look at the top of that box out here inside of the Dow futures. That's at the 18,050 level. Price should have been able to have broken through there. We had a message this morning at 4:30, I believe it was 4:30, 3:30 or 4:30 a.m. That message was that prices should move higher inside of the Dow, but they cannot break through that 18,050 level. Prices pulled back thus far. It's found its comfort level, its comfort food, its comfort price area is 17,922. A break below that brings in the 17,836 to perhaps even down to 17,836 to 17,691 area into play. Russell 2000. It's formed a new box out here. It's outside of the descending or the rising price channel out here. Russell 2000 could be forming a huge A to B equals CD to the downside. As far as it's not even on here. Let me do this. Sorry, my apology. There's a tool, my A to B equals CD tool. There we go. I don't know why it wasn't on, but it's on now. If we take a look at it, its price projection, potential price projection right now, the A point would be out here April 27th side, the B point April 30th, and the C point yesterday's high, 0.3, well, 42% retracement. We'll call that a 0.382. If, in fact, we see the markets crack, the Russell 2000 could be the largest crack to the downside with a close below that 12,1150 area. And if we see that, what that says is that price ought to make a way move. Price ought to move down towards 1158. This is Steve Rhodes with TFNN. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. NASDAQ futures off 22, Dow futures down 42. So over in Japan, Constitution Day was May 3rd, and May 4th is maybe Greenery Day? Greenery Day out there. In any event, that's why the Japanese markets are closed. Now let's go take a look at Goldilocks out here. We had that nice full moon that came in Sunday evening, I believe. It was late Sunday evening when it actually occurred. As you and I know, that we take a look at the full moon with regard to its impact on gold. You know, gold versus all of the other markets out there. I cannot tell you why. I just can tell you that you've got to. If you trade gold, if you're trading the miners and you're not paying attention to the full moon out here, you are letting a invaluable tool really slip right through your fingertips out here, because oftentimes 80+% of the time the full moon acts as an initiation, either the upside or to the downside. Now, what we also know from a technical pattern standpoint is we can see the decided descending price channel that gold has traded into. We've got plenty of points of contact to the downside. That's the red diagonal line from upper left to lower right that's on my screen out here. So we know that that's a really good, formidable area of resistance. Now, inside of gold, there's also this horizontal level area of resistance that in essence has been in place. I'd say it's really been in place since April the 8th. There's been a couple of days where things have gotten maybe, well, they were really only one day where things got 2 days, where things got a little bit out of hand. But in essence, gold has been closing within about a 10-point range since April 8th. So for nearly a month out there. So someone, something, some force, some invisible force has got its thumb on the closing price of gold out here. So even though we're seeing a bit of a breakout here, now this time I can believe the breakout, and I can believe it a bit more because I've got really 3 bullish signals with regard to gold. That doesn't mean that it takes off, but there are 3 at least, 4 bullish signals that I can see inside of the price of gold. What are they? You ask that question. Well, it's pretty simple. The simple things are, we have a swing point down here from November the 7th. That swing point's been tested. It's been tested on lighter volume. That's 1179. That area has been rejected. Actually, I'm going to probably come up with 5. Yesterday, we see a bullish reversal signal here, a little bull sash candle. Now, we see that bull sash candle at the same time that we had the full moon. That would become number 3. As long as that low's not taken out, it suggests that we've got an initiation move. 4, we've got a break of the descending price channel out here. That's a close above. Well, I don't know how it's going to close today. That's the thing. Right now, I can say that as we speak today, we are seeing a breakout of that descending price channel out here. So that would be number 4. Number 5 is this little squiggly yellow line on my screen. It's an important line, specifically with regard to gold out there. Not so much on other areas, but certainly with regard to gold, it really works well to help you identify areas of support or resistance. That is priced out at 1187.60 out here. Now, what does that mean? It says that at least the price of gold ought to test the most recent swing point of April 28th. Now, is that just a test of 1198.60, the low? Perhaps. Does it mean it's going to be a test of the high, 1214.90? Perhaps. I don't know. But if it does test that, then meaning get in the 1214.90 area, now we got some action. Because now we're really extending that initiation move, that full moon initiation move. We are getting now back into the swing point out here, the B point really of an A to B equals C to the upside. That would be April 6th out there. And as long as it gets into that swing point low, which is 1212.60, says price ought to go test the highs of 1224. So you got to take this one step at a time. Yesterday, we saw the price of gold run right smack dab into resistance, in essence closing right on the top of that trend line, that channel line out there, that red diagonal line on my screen. Today, we're now seeing some follow through. So through my glasses that I'm looking at, gold has a bullish look to it. We'll see how it trades for the rest of the day. If we look at silver out here, silver's up 15 pennies right now, trading out at 16.57. In the case of silver, it's actually now taking on its swing point. Well, its most recent swing point out here, and that would be the trading session from April 29th. Any close above 1668 would be very positive. We have seen that level tested. Yesterday, the test was 1669. It got up to 1669. So it looks like that area is going to be tested. That could set up a small A to B equals CD to the upside. Inside of silver, that pattern would look like this. Your 8 points down here on April 24th low. Your B point is the April 29th high, and your C point is the April 30th low. Now, 1-to-1 only takes you to 1695 out there, but that would be the projected move inside of silver. So if you're long, watch for what happens when price gets up to that 1695 type level. Light sweet crude, let's go take a look at it. Up a nice $1.61 this morning, up at $60. Of course, we know light sweet crude, it loves this rising channel. Invisible forces, that's truly what it's all about. Looks like light sweet crude here. We're going to try to make a run for the top of that rising price channel, $63 or so. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 6 points, traded 18,163. S&P is down a point at 2113. Composite off 12 points at 5,004. Russell 2000 slightly red. The DAX is off 15. The FTSE's up 33 points out here. Gold's up $8. Silver's up 15 pennies. Light sweet crude up $1.46. Lead the charge to the upside. It's Netflix up $17 and change, up 3%. Was Netflix out with earnings before the bell, after the bell last night out here? No, not that I see. Abiomed, ABMD is a ticker symbol, up 14%, up $9. Golar LNG, that's up 18%, up $6 and change. Tesla's up $7. Mallincourt Publications up 5. Estee Lauder up 4. AMAG Pharmaceuticals up 350. To the downside, we've got Qualis, QLYS, down $14, nearly 25%. That's taken a bit of a haircut here this morning. PTC Therapeutics down 7%. Qualis announced revenues $37 million versus 30, so they beat their top line, and looks like their earnings per share looks like they beat that, but they must have missed estimates or something, or gave some really bad outlook here, because it's getting cut 26%. Let's go see what it's trading down into. So that's a huge gap down in it, and it's coming. This thing had broken out with conviction. Man, this is interesting. This thing made a high volume high yesterday, all-time high, it looks like. Talk about potential volume off of the top out here. Most certainly did. Now, that's a nasty looking monthly candle out there. There's your bearish reversal candle on a monthly chart out here. Of course, the month is not over. We're just kind of in the beginning of the month out there. But if that's the case, that's pretty nasty. Let's come back to the daily chart out here. So we can see that this equity has now come back to a breakout area. It didn't break out too long ago. It was really back on February 10th, 1.8 million shares. And yesterday's high volume high out here was 2 million shares. But this morning, we've already seen a dumping of 1.3 million shares inside this equity. So if this area can't hold, remember in the breakout, you're really looking for kind of three areas that you want to always note on your chart when you're looking to buy breakouts. Now, you like to see breakouts come back with light volume. It's potential that who's ever in this equity that was pushing this thing up, from February 10th will be out here to support it. You just don't know. But when you're taking a look at places for a price to pull back to, on something not like today's volume, lighter volume, like to see it pull back, in this case here, into the gap area. Could be there's really four lines, right, that you would look at with regard to pricing. And then you just simply have to make a choice. In this case here, you saw the breakout, just as an example, on February 10th, 1.8 million shares. If you wanted to buy that breakout, price comes all the way back to that breakout back on March the 11th with, 456,000 shares. That's pretty nice. In fact, the very next day, 282,000 shares out there. That's a message that it wants to move higher out here. You had a hammer-type candle on March the 11th out here. So that was holding as support. In fact, you got three tests of that area. You had a test on March 13th, 335,000 shares. Now, when it does start moving higher, it decides it wants to come back and shake people out, because on March 25th, it closed back below the breakout of 43.28. But it did it with 331,000 shares out there. And then the very next day, nice big old bullish engulfing candle out here is telling you that, whoever was in this equity was really out here supporting that breakout area and was able to push this thing higher. Now, when it pushed it higher, looks like it completed, or it's trying to complete, an A to B equals CD pattern. As such, if we take a look at the 8 point, I'd come down here to... I'd come down here to the February 2nd level. Looks like either the 5th or the 6th for the B point, and then the low down here on the trading session of March 26th. So yeah, what did it do yesterday? It actually completed off the 1-to-1 A to B equals CD. That price move would be 55.22 as a price projection. It was off. It actually got to 55.47, so it got 25 cents higher out here. So now what do you do? Well, at this stage here, you got too much volume to really, quite frankly, do anything inside of this equity, in my opinion, at the moment out here. So you just sit there and watch, because price could easily, if it really decides to break and crack, price, you could make the case that price ought to come down to about 22.65 out here, and it's at, $40 right now. That's ticker symbol there was QLYS. Nation Star Mortgage, NSM, that's off $4, down 15% this morning. Looks like they produced a loss of 53 cents versus a profit of 21 cents, and revenues of 382 million versus 449. So they're down, and this equity here certainly moving lower. Now, Nation Star Mortgage, let's put this on a little bit longer term chart out here. Let's look at the weeklies. If you take a look at the weekly for Nation Star, this does not look good at all. This equity made a high back in 2013, out at a price point of $58. It really has been just traveling sideways, in essence, since February 3rd. But that sideways action is now turning into lower action out here, because this is a weekly chart. We're seeing price really break through these levels and suggest that, what does this suggest? You've got the weekly volume of 8.3 million shares out here. So we're going back to February 13th, 2014. Let's go see what's going on around that time period on the daily chart. We're looking at February 2014. That would take us right down here, February 6th. That is in essence, is a swing point out here. That had volume of 3.2 million shares. Today, you've done 406. So this could be setting up a really large move back to the, if we take a look at the weekly chart out here inside of Nation Star, it suggests to me that this thing's going to come all the way back into the 2012 lows, maybe around $15 or so, near $22.12 as we speak right now. I do want to say thanks to, looks like it was Maria in New York who actually, so we got a couple of folks that provided me with information about Japan's market being closed out there. We had, I think might have been, was it Jay in the Tiger's Den? Who was it? It was It was it? I can't see it. Somebody wrote in there. Yeah, it was Jay in the Tiger's Den. Also, Golden Week. So you've got Golden Week going on this week. So the market should be closed. I imagine it's closed for the entire week out there as they celebrate Golden Week, which is a cluster of holidays between April 29th and May the 5th out there. Of course, today's May 5th. I don't know, maybe the markets come, but Golden Week sounds to me like it should be for the entire week, right? In any event. Just a quick follow-up on that. Now, not much going on inside the indices as we speak right now, well, with the exception of the NASDAQ Composite. So what do we want to? We haven't taken a look at anything moving to the upside. Let's do that. Let's go ahead and take a look at what's going to the upside out here. Netflix being the leader in the clubhouse. Now, Netflix, of course, strong like bull. We've taken a look at the weekly chart here for Netflix. We know that it's taken out a cluster. It's also had a cluster up at the highs in around the 480-ish range, 485. We know that those highs were taken out with conviction. Wide price spread, accelerated volume, 39 million shares. Right now, we're seeing a little bit of a cluster around here as well up at these highs. This is the weekly chart that we're looking at, but all points look pretty. Everything looks pretty good inside of Netflix, even at the 569 level. That's on the weekly chart. Daily wise, what we have going on here today, we've seen several breakouts, no breakdowns or anything along those lines out here. Right now, we can see our daily market profile 576.13. That's an area of resistance. This may just consolidate between 537 and 576 out there. That's on Netflix, NFLX. We look at Golar LNG. If we take a look at now, there was a question out there about natural gas, so I'll get to that in a moment. That came in yesterday. But this thing has broken out nicely. Big, wide-ranging bar to the upside. Did they come out with any earnings out here? Any earnings? Let's see. No. Maybe this is a, what is this? Buyout commences negotiations for, let's see here. What does this say? For the company's third Go Fling vessel out here. Okay, so no, not a buyout or anything along those lines. In any event here, a nice gap up, good volume this morning here. In fact, very good volume, 1.5 million shares. This thing had a nice breakout session back on March the 5th. This thing went from a low of $30 up to $34.70 that day, had volume of 4.2 million shares. This is running into a bit of a supply line. These folks right here at the November 28th date, they're happy campers because they were in this equity at about the $48 mark, and they were not feeling too good when this equity got down to $29. So this is your supply line out here, and this may be the extent of the move for a while inside of Golar LNG. We take a look at Abiomed, ABMD is the ticker symbol. That's up about $8 right now. This thing here had a real nice sign of strength back on. It's had several signs of strength. Wow, look at this thing. I don't know what they do, but they have had several signs of strength out here. The first one off of the bottom. Now, this is how you break out of a consolidation or an accumulation area. That is October 3rd, 1.8 million shares. Let's pull this back further. Oh, my goodness, look at that. So you're having a lot of low volume accumulation between the prices of $21 and $29. So about an $8 range out here. And then, boom, this thing really breaks out big time and has not looked back. That was on October 30th, 2014 with 1.8 million shares the upside. Then a big gap up out here, which is the larger of the three gaps that we're looking at. That was on January 28th. Then you had a nice gap up out here with volume on March 24th. Today, you've got that same type of gap up going, 444,000 shares out here. ABMD is a very nice looking stock chart out here. Yeah, don't be too worried about where, can those gaps get filled? Of course, anything can happen out here. But those are signs of strength out here. If we had just simply colored those candles in so there was a wide-ranging bar, you wouldn't be saying price was going to go back to those areas, right? You just wouldn't be doing it. You'd be looking at that wide-ranging bar, and you would say, look at how gosh darn strong that is. Don't forget, that's all that a gap up and or a gap down really is out there. Now, why do things pull back? or why do things go up and then fail at those areas? Because those are areas where you saw buying or selling out there, people either supporting or people looking to unload more shares out there. So don't get too carried away. Gaps are your friends because they give you a couple. They maybe are more difficult to navigate because you're not sure is the breakout going to be the top or the bottom of that. But if this candle here was just simply painted in, I'm referring back to January 28th out there, would you still say that price was going to come back to the bottom of that area, like no matter what? You wouldn't do that. You just wouldn't. So what's the difference between that and the mere fact that price just simply gapped up? Yeah, you got to avoid a price out there, but you just got to kind of keep things in a fresh perspective out here, at least Stevie's perspective. Okay, let's go take a look at, let's go see what's going on now in the summation index for the indices out here. We're still below zero inside the New York Stock Exchange, still below zero inside the NASDAQ Composite. So we've got weakness in those two areas of the market. The Dow continuing to try to flex its muscles out here with being a summation index still being turned up with price being up above the zero line out there. Of course, we know in the case, and that being the case inside the Dow, then why can't it just simply take out either the TAS market profile resistance area at 18,050, or why can't it take out this descending price channel? Maybe it will. If ever there was an opportunity to do it, now is the time. It's in bullish formation out here. If we take a quick peek in at the VIX index, what's the VIX index doing here this morning? Let's go take a look at it. Let's go over to this chart right here, right? Yeah, let's go over to this chart right here. So we take a look at the VIX index. Let me blow this up just a tad. There we go. Up a bit this morning here. But well below the 50-day exponential moving average, which is 1415. If the market's really going to crack, what you'll see is you will see a close above that very significant level of resistance. That 50-day exponential moving average has been a major resistance inside of the VIX index out there, the cash index. What else do we want to look at? There's really not much more to look at. We ought to just simply go on vacation now, right? No, we can't do that. Let's go take a look at currency pairs. We didn't look at currency pairs, for goodness sakes. Let's go take a look at your friend of mine, the Euro-Japanese yen. Trading out right now around the 133.97 level. What do we know about the Euro-Japanese yen? Well, we take a look at this currency pair here. It's gotten into, from the daily perspective, has had a nice strong move up off of the lows from back in the middle of April. Got into a overbought condition with that relative strength indicator getting above the 70 line. Right now, because the body of the candle is the essence of price out here, it's not providing us with a whole lot of information other than the piece of information is it just moving sideways right now as it works off that overbought condition. That, quite frankly, is more bullish than bearish out there. However, yesterday was a bearish engulfing candle. So the question is, do you see follow through today? If you do see follow through today, meaning it closed below where it's trading right now, then what that would signal is you would signal some type of retracement. You know, was it going to pull back to the 0.382 retracement and take you down into about the 131.77 level? We'll pull down back to the 0.618 area, 129.60. I would say 129.60 would be a pretty darn good target for this currency pair because of the way this thing broke out from right around that level. If we look at the euro itself with regard to the U.S. dollar index, that's pulling back just slightly here this morning, but really a similar looking pattern to what we were looking at inside of the euro-Japanese yen currency pair. We have not seen any kind of reversal signal, though, whereas we did on the euro-Japanese yen, we have not seen that on the euro-U.S. dollar. Right now, the Dow's off 28, S&P's down 5, Composite off 29 points. Right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 34, trading at 18,035. S&P's down 6. Composites off 34 points as well. With regard to natural gas, the question was, I don't remember the exact question. It was really, let me turn over here and look. The markets pull back, natural gas, gangbusters. Can you see the correlation? No. So I was asking about a correlation going back to 2000, 2002, 2007. I didn't do any work on that, Larry. My apologies for that. But let me just tell you what natural gas is doing. Both you and I have been expecting natural gas to form a bottom in April. Now, when we take a look at the 11-year cycle pattern, it was around mid-April, early April out there. In fact, natural gas didn't really give us, well, it gave us a bullish sign back here on April 14th. So it did give us a bullish signal out here, a little doji, a little bullish engulfing, a little follow through on April the 15th. And then price gave it up. Now, price gave it up when we saw that little gap down on April 27th out here below those market profiles. That was an interesting move. But we also got a nice little bullish engulfing candle, very next candle session out here. So I do believe that if natural gas has found a bottom, it's in. Seasonally speaking, we were looking for that bottom to come in April. Okay. April 27th now appears to be that date. We're using that as our triptych, our guidelines out there. And now we can see with conviction, natural gas has broken off to the upside. Wide-ranging bar, accelerating volume, couple 100,000 contracts back on April the 30th out here. Now natural gas ought to run higher through the June-ish timeframe. Natural gas seasonally makes a high into, I don't have that chart up on my screen, but sometime into the summer timeframe out there. And as we get closer, and should the pattern continue, then we'll go continue to check back on that. So I believe that this individual is long the UNG, and if so, I think that is a good trade out here. There's nothing that indicates that is not a good trade. Just keep your stops in place inside of any trade, and you'll be all set. Folks, thanks so much for joining us on Terrific Tuesday. Stay tuned. Tom O'Brien will be up next with his market update, and I'll be back to do the second hour of the Trader's Edge. Have a great Tuesday.